I have an idea for your next Thanksgiving conversation. Perhaps you can talk to your family about life insurance and long-term care. That's probably the number one way of getting yourself kicked out and never being invited to the family dinner again. This is one of those topics that, while is very morbid, is an absolutely critical part of a successful retirement plan. Now, the insurance realm has just all kinds of different things to navigate: considerations, costs, conflicts of interest if you're buying from insurance agents, all kinds of different things. So today we're going to talk about FEGLI and the Federal Long-Term Care Insurance Program, and we're going to discuss some of the considerations for life insurance, long-term care, things you need to be thinking about, and how you might be able to save yourself some money. If you're new to this channel, we are a group of advisors that help federal employees make better financial decisions. We've got a website called thefedcorner.com. Tons of great resources. If you haven't checked that out, we'll put the link in the description below. There's also going to be an article that's affiliated with this video. And so we go always deeper in the article than we do in these videos because we try to keep these relatively short. Make sure you check the article below so that you're getting all of the information that we're giving out. At its core, insurance is a safety net that acts to protect against all kinds of bad things that would jeopardize a family's financial safety. There are some risks that you can self-insure. For example, you don't need water heater insurance. Have an emergency savings so that if it goes out, you go and you buy another one. But there are some other costs, like a mortgage, for example, or sending your kid through med school, or other significant costs like healthcare costs later down in life, that you may want to consider insuring. Now, insurance planning is one of the topics that we see so many retirement plans overlook. And frankly, traditional wealth management has not really addressed insurance planning because most of them are really just investment management. They're not adding any other value aside from just creating a portfolio. You should also be getting advice included in that consists of insurance planning, estate planning, and various other tax planning and all kinds of different topics of financial planning. Okay, so the first thing is we're not going to go into the specifics of FEGLI. That is easily acquirable. Actually, there is a link into the article on how to get the specifics of FEGLI. So just go below, find the link to the article. In the link, there's a link to OPM's website. You can get the information relatively easy. We don't need to cover that. Instead, like many of our other videos, we're going to cover the more advanced financial planning concepts so that you can begin to apply these concepts as you're making decisions that are best for you and your family. So let's first talk about acquiring insurance. You can generally go to an insurance agent or you can go directly to an insurance carrier. The challenge in going to an agent is that depending on who they work for, they're not acting in a fiduciary capacity. So they may be conflicted depending on their relationship with the insurance carrier. The insurance company may say, well, we'll compensate you better if you sell this insurance product instead of that insurance product. This is something you need to maintain within your awareness. I'm not saying insurance agents are bad. They are experts in the field of insurance, but understand where their advice is coming from. And if it doesn't make sense to you, ask questions why they're recommending a specific thing. As a federal employee, you are likely eligible for FEGLI. So this is a group life insurance policy, which allows you to acquire relatively affordable life insurance because the risk of your life is being pooled with all other federal employees in the program, as well as it being subsidized by the government to a degree. So that is one of the most affordable ways for you to acquire life insurance. If you're a young person and you have a family, please get as much FEGLI insurance as you can so that you're not leaving a financial burden as well as an emotional burden. But really, how much life insurance you need can be debated. There are various different ways of coming to this conclusion. There's a mathematical one, but there's also an emotional one. What makes you feel safe versus what actually does keep your family safe or anyone that you're responsible for and will be leaving behind in your death. The primary role of life insurance is income replacement, not only just when you're working, but as a Fed, you have a pension. So yes, there are survivorship benefits available to first pension. Your spouse may lose half of that in your early demise. And so they are still having a reduction of income. So what is the difference between if you died as soon as you retired to when your spouse retires, which, who knows, 90 plus, let's say 100 just to be safe. And so we can easily figure out what the mathematical gap is of your not being around to generate that full pension. That's one way of addressing the life insurance component. Well, perhaps there are legacy goals that you would also like to leave. Maybe you want to also pay off the house and pay off your children's education, or maybe you want to send your kids to grad school. Those are things that can be fulfilled with life insurance, although there are other ways to kind of address that need. I think one of the most important things is you have to remember life insurance is for both young people and old people. Just because you are later in life and perhaps have accumulated some assets doesn't mean you're totally out of the game for life insurance. As I mentioned earlier, there are still components of one, Social Security going away, because the survivorship for Social Security is that you get the higher of either yours or your spouse if your spouse passes away. And with your first pension, your spouse can receive as much as 50%. So that can be a pretty significant change in cash flow for them if you were to die too early. Now, life insurance comes in various different packages and formats and term and perm and so many different groups. So let's talk about some of these. The first we already talked about is your group policy. That really is one of the most affordable ways for you to acquire life insurance as a federal employee. You should definitely be using it if you need life insurance. Beyond that, you can get term insurance, and term is for a specific number of years, usually in increments of 5 years. Up to about 30 years is where a carrier will issue out a term policy. During that term, your policy has a fixed price. Beyond that term, if you want to renew your policy, the costs are much greater. For one, you may not be in as good as health as you were, say, 30 years ago when you got the policy. Maybe you've had some health challenges along the way, but also you're that much closer to death. And so, while that sounds a little morbid, an insurance carrier is going to look at that and say, what is the probability of your dying too soon compared to when you were 35, 40, and maybe when you first got your policy? So they're going to charge you more for it. And the last type of insurance policy is the permanent type of life insurance. So these are typically the most expensive. They do last forever, so there is no term as long as you're continuing to make payments on your plan. We're not going to get into all the different kinds of permanent insurance. There are so many. There are some combo plans that do life insurance with long-term care that we will discuss here in a couple of minutes, but for the most part, just know that they exist and may or may not be a good part. Okay, so let's talk about long-term care insurance. Health insurance, or FEHB, including Medicare, does not cover extended long-term care. Medicare has a component where they do offer some form of coverage for a very short period of time, but beyond that, it's on you. Now, as a federal employee, you have access to the Federal Long-Term Care Insurance Program. This is a very affordable way of getting long-term care insurance when you're young, less affordable when you're older, for the same reason that insurance carriers will charge you more for life insurance the older you are. It used to be that long-term care events would last somewhere between 2 or 3 years. Well, in our experience and seeing things with our clients, the advancement of medical procedures and medical care in general has sometimes allowed long-term care patients to continue to receive care, sometimes for as much as 4, 5, 6 years, sometimes even longer, depending on the circumstance. And long-term care is something that is very expensive. So depending on where you live, we're right outside of Washington, D.C. Our clients have experienced anywhere between $80,000 a year, $100,000 a year, $120,000 a year, depending on the facility that they're in, depending on the level of care that they're receiving. And so this is something that is a significant financial risk if you've not saved enough to be able to self-insure against this type of thing later on in life. And the challenge with the federal long-term care is that it's straight up long-term care. What do I mean by that? When carriers issue straight up long-term care, they're adjusting the cost with the risk. And so you're paying for this insurance your whole life, and then when you need it the most, which is somewhere between 75, 80 plus years old, that long-term care policy becomes so unaffordable that most people begin to drop the long-term care coverage. Well, statistically, that's when you may need it the most. And so all of that money that you put into the policy is now completely gone. There are certain kinds of life insurance policies that allow you to get a very small insurance policy on your life. So the death benefit might be $5,000 or $10,000, and the other component of it being $500,000, I'm making up numbers here, in long-term care coverage. Why is that? By creating a long-term care insurance program with a life insurance wrapper, there are some stipulations that allow the premium to remain stable. In some cases, you can pay them for about 10 years, sometimes 15, 20 years. You can structure them any way you like, and then they go away. There's no payments. Now again, please, 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 read the illustrations, read the actual policy information. When you're talking to an insurance company about these things, I would advise you to have an advisor that understands this type of policy and that also is not conflicted. This is something that if they are doing that, it's not a problem as long as they disclose that to you and as long as you understand the relationship and really understand that that product is or isn't right for you. There are other types of policies that are both long-term care and life insurance at equal values, and so they are not cheap. But if you can get them early in life, or if you've been diligent savers, this could be a solution for you where it can either be a death benefit or it could be an accelerated benefit of your life insurance to be used for long-term care coverage. Again, I cannot stress enough, make sure you understand these policies. The more features there are, the bigger the documents, the more you really need to understand what it is that you're purchasing. And finally, a quick word on investments and insurance vehicles that are the combination plans. Most of the time, in our experience, they come in the form of annuities. Now, as a federal employee, you already have two annuities. You have your FERS pension, as well as Social Security. Another way of referring to your FERS pension, a FERS annuitant. Well, the reason you're called a FERS annuitant is because the FERS pension is essentially an annuity. Relinquishing more of your liquid capital in your portfolio, taking money and buying an additional form of pension really hasn't made too much sense for the families that we've analyzed and done this analysis for. It may in your case, but philosophically, I truly believe that federal employees already have two pensions. Why are you purchasing another pension? You can be doing other better things with that liquid capital instead. Okay, so in summary, let's talk about where some of these costs fall and how much flexibility you have with each type of policy. We're going to throw something up on the screen here so that you can see the relationship between the different types of policies, both in life and long-term care, as well as how the costs and features relate. I think this is going to be really helpful to you. We're going to leave it up on the screen for a little bit, so if you need to screenshot it, it's going to be very helpful to you. All right, here we go. So we have the life on the left, and FEGLI, of course, has one of the most cost-efficient types of policies out there. The next one on this list is going to be term insurance, a little more expensive, but you can also acquire a little bit more insurance as well. And finally, permanent insurance obviously is the most expensive, but you have the greatest level of flexibility, greatest level of features, and potentially more coverage as well. On the long-term care side, which is on the right, again, the federal long-term care insurance policy up front is the lowest cost option for you right now. In the future and over your lifetime, it becomes unbelievably expensive. The same thing goes with private long-term care insurance. Now remember, this is straight up long-term care. So they make adjustments every 3 or 4 years to the tune of somewhere around 20 to 25% in premium increases as you age. And that's something that gets very expensive very fast. Now, this is where I think most people find the best value, is finding this hybrid policy where it's a small life insurance policy. We're looking at the orange one right there, but a much larger long-term care coverage. And then finally, if you want all the bells and whistles and all the features, you can have it. These policies can be expensive. In the green, you have the equal life long-term care policies. Again, very complex products. Make sure you understand them. They are not for everyone. The important thing is that you're working with an advisor that is putting your needs first and helping you to identify the best type of insurance. And last thing I want you to consider, don't think that you need to cover all of your need with insurance. A lot of people will just do half a loaf, if you will. If we say that a long-term care event costs $100,000 a year, and we say that, okay, we'll assume that that happens when you're 80. So from 80 to 85, $100,000 a year in long-term care event. Perhaps you get insurance for only half of that. So just remember, the deal with insurance is the sooner you get it, the more cost efficient it's going to be. So if you have this need, make sure you're having these conversations with your advisors well in advance. And if you enjoyed this video, hit the like button for us, because that helps us to understand that this is the type of content that you want to see. Consider sending this to one of your friends and maybe even subscribing to the channel. We're helping federal employees make better financial decisions through these videos, through our website. We're going to put the link below, and we'll catch you next time.